Hello and welcome to this week's episode of the Build Value by Choice podcast show. I am your host, Nana Barsu, and in this episode, I have with me Anika Penn. Anika and I are going to be talking about how you make your business attractive to a strategic growth investor. So if you want to make better business decisions and be better prepared for the future, so your business can be more attractive to a long-term growth investor like Baillie Gifford, where Anika works, please tune in now. Now, in this episode, we are going to be discussing a little bit about how Anika and her team approach their investment process. So I want to take a little bit of time to share with you her bio. She's very passionate about connecting great ideas with capital and has the privilege of doing this daily at Baillie Gifford. Of particular interest that she has is helping women and minority entrepreneurs to gain access to capital, which is a big issue, and the resources that they need to thrive. She is the entrepreneur in residence at Smith College, where she has advised women-led startups on their business models and their pitches to investors. As the co-founder and CEO of Frontier Health, which is a marketplace for innovative, frugal medical services for developing countries, she built the very first global marketplace linking medical device innovators with healthcare providers in the developing world. Her earlier work spanned the fields of HIV, AIDS, reproductive health, and civil rights policy. Before she founded Frontier Health, she worked at the apex of finance, regulation, and medical research for several years, and just witnessed firsthand the difficulties that small companies face bringing their healthcare solutions to market. So that's been a big influence on her thinking. She's honored to serve on the board of trustees of Johns Hopkins University and is also the president of the Johns Hopkins University Alumni Association, where she received her master's degree in international relations. I happen to also be a JHU alumni, so just a little bit of a disclosure. We didn't know each other, back then, but she's an alumni.
Happy to know each other now.
Yeah, happy to know each other now. And then one thing that's also pretty cool about Anika is that she spent a little bit of time studying Mandarin at Nanjing University. So welcome to the show, Anika.
Thanks.
Awesome. And just for the sake of our audience, we want to make sure that we have a website, bit.ly/get-free valuation. So people can go and sign up and find out, get a free assessment of how attractive their business is and how that links to what Anika is going to be sharing about today. Anika, so I always start this show, trying to get a little bit of background and context about how you got into investment and just, I know you're thinking what impacted or influenced you're thinking about small businesses having a devil of a time having access to capital. So what got you into on your journey to where you are today?
Yeah, I didn't, if you had asked me when I started my career or if you had said, do you think you'll ever work in the financial sector, I would have said resounding no.
Yeah.
It was never a goal of mine. I think I have always just wanted to make things, make the world a better place and make the world sort of just and equitable for as many people as possible. I started my career thinking I was going to be in civil rights law. I worked in Washington.
Mm-hmm.
I then on civil rights policy, I then switched to international public health policy. And I think there I really saw that, we were working on HIV/AIDS policy in countries or in communities where there was very little access to water and poor governance. And I wanted to learn about the underlying economic and political conditions that lead to poor public health outcomes throughout much of the world. And so I then went to school at Johns Hopkins, where I learned some of those contributing factors, and then went to work in the US healthcare industry, where where, you know, the way that the US delivers health, the way that healthcare is delivered in the US is not necessarily replicable. And so if you want solutions that are replicable throughout the world, that innovation is happening in a place where there's lots of sort of regulatory capture and lots of misalignment of incentives is perhaps not optimal. And so then I started Frontier Health with the idea that I would build a marketplace where low cost solutions get that innovators of low cost solutions have a path to the market. So it was really a trickle up marketplace as opposed to sort of trickling down, which is how medical device innovation happens throughout much of the world. But, you know, had trouble really capitalizing that business, and through that experience realized that, you know, access to capital is another lever you can pull when looking to make the world a more just and equitable place. And so then made the switch to the other side of the equity investment table and worked and now work at Baillie Gifford. So that's sort of my path from going from Washington to New York via, you know, LA and China and some other, and Kenya.
There you go, Kenya. All right, that's awesome. So
Yeah.
like,
It's
so
the
how
long
has,
way as opposed to taking the bus up I-95.
yeah, I'll take an Amtrak.
Yeah.
So life is never a straight line. So how has that kind of helped and influenced? Because, you know, different backgrounds, you know, people in the equity management and investment business, you know, come from different backgrounds. Some of them, maybe they started off in finance, and it was more of a straight line thing. How does that give you a different kind of perspective, given your kind of legal policy and civil rights kind of background? How does that help you kind of, because especially the humanitarian side of it, the empathy side of it, and also just being able to drill down into policy and be able to maybe influence policy leaders about whatever policy and legislation that he is sponsoring, how that impacts
Yeah,
investments,
you
whether
know,
in
so
healthcare or otherwise.
yeah, so I'll say this. So in my position now, and really for the past 10 years, I haven't done anything with respect to policy or influencing policy. Um, um, what I will say, that's where I started my career, but it's taken a turn from there. What
Okay.
I will say is that I think a lot of where we see opportunities for improvement are related around misalignment.
Mhm.
Misalignment of incentives and the profits that can come from that. And I think that what
Okay.
I like about my current position is that they're a very long-term investor.
Mhm.
They're a late stage investor, so very you know, so these are companies that are not early stage. They are, you know, one or two rounds from IPO. But they stay, the average holding time is very long. And so that allows for a type of alignment across the clients, across the company, across the companies that we invest in, that helps me sort of be true to the values that I want to uphold and adhere to, and, you know, sort of, I don't want to say spread, I'm not any sort of evangelist in any way, but so, you know, one of the companies that I worked on, you know, one of the early stage investors says this is one of those few companies that is disruptive, but it is good for the employees and good for the companies and good for the customers. That over the long term is a better outcome than something that's solely good for customers or solely good
Mhm.
for, you know, one group. And I think if also when you stay with a company for a decade or more, you're
Mm-hmm.
really well aligned to what they're doing. And I think when people think about, private equity is is a big term, right? There are all
Mm-hmm.
types of it, it covers all manner of sin, if you will. And I think there are times when I've met companies and their view of private equity is that you're going to come in and extract value, cut costs because you have a group of investors or because you have a group that you're trying to earn money for in the short term. If you're trying to earn money over the long term, it allows you to realign your values with the values of the folks that you're invested in. And so that's where I'd say my desire for equity and just outcomes aligns itself, if I may just
Yeah.
continue to overuse the phrase, with the companies that I get the privilege of meeting and researching. Does that
Okay.
make sense?
Yeah, yeah. I mean, yeah, it makes sense. I mean, it's just a matter of, there's the values, there's alignment of values and goals, and the nature or the profile of the companies that you tend to look for. And that helps you kind of be congruent with your point of view of the world and how the world is supposed to be, and the mechanism
And how
by
you make
which.
things better for everybody. Yeah.
Exactly. So you made a certain distinction, which is important because you distinguish between startups and late stage disruptive growth companies, and you're a different sort of private equity kind of company. Um, and you don't necessarily do exits. You are there as a growth investor. So uh, as opposed to the financial buyers or private equity companies that will buy a company and just kind of harvest the parts, or improve it a little bit and just kind of sell it and shed jobs and whatnot. You don't do that. You just you invest in the company for a long period of time. What is the average length of time that you take to research a company, and the length of time that you hold a company in your portfolio?
Oh, that's really hard to say. So, and I'm happy to talk about, we sort of talked about this before. I'm happy to talk about sort of the larger view of things,
Mm-hmm.
the larger and what advice I can give companies, um, but it's difficult for me to really put a number or to answer specific questions about my specific firm, because we have many funds and they have different mandates, and some of them are invested in public markets, some are invested in private markets. I will say, when we do talk to companies, we and our reputation is that we are a very long term. So where I think the average holding time on Wall Street is 2 or 3 quarters,
Mm-hmm.
and we it's like a decade or more.
Okay.
But
Okay.
it varies,
Right.
wildly, depending on the specific mandate of a specific set of, depending on who the clients are and what the
Right.
clients want.
Yeah. And
But
one
if
of the.
you're looking for a quick out,
Mhm.
the clients who are looking for that generally are not interested in investing with us.
Right. Okay. Got you. Got you. So, because I mean, there are multiple exit options. One is to sell outright. The other is to go the IPO route. The other is to scale.
Mhm.
And so it looks to me like you tend to focus on the scaling side of it and the IPO side of it, right? Are those two of the main exit options?
Yeah,
Yeah.
definitely. But we work with all kinds of, we have, there are earlier stage investors that we have relationships with. And when I say relationships, I mean that they, introduce us to companies. We get to talk to them about companies. I think, like I said, if you are in, private markets,
Mm-hmm.
there are all different kinds of investors. And really, from the perspective of a business owner, it's really about, again, like alignment. What kind of relationship with an investor am I looking for?
Mm-hmm.
Um, and what do I want out of it, and what does that look like? And then, then there's somebody out there, as my grandma would say, there's a Jack for every Jill. And I do believe that in in private markets.
Okay.
There are all different kinds of investors,
Yeah.
and for every stage.
For every stage. Yeah. Now, I want to kind of, from the perspective of a business owner, who fits the profile that you look, that you tend to invest in. What are some of the things? Because we try to advise business owners to look at their business in order for them to be able to know that they're making the right type of decisions for the future. They need to be able to look at it from the perspective of an investor such as Baillie Gifford. What are some of the things that you look for so that if a business owner is looking if let's just say Baillie Gifford fits the criteria of a company that if I have a company X and I'm researching companies that could either acquire a company or could bring in capital infusion by way of investment for the long term if I'm looking to scale, what are some of the things that I should know that you guys prioritize, or how you guys evaluate companies, just so I make sure that my decisions are strategically aligned so that when the time comes, I'm better prepared, as opposed to the time comes and there's just a lot of back and forth and I feel like I wasn't treated fairly because there's misalignment. There goes that word again. There's misalignment between what my expectations are for how much I should get from a percentage of my business versus what you're offering.
Yeah, I think, again, I want to get away from speaking specifically about Baillie Gifford. We're a growth equity investor, so we're not going to buy anybody's business.
Right.
I think that, generally, you want to see growth, and depending on the stage of the company, the customer acquisition, how that the customer acquisition is getting cheaper and has evolved.
Okay.
I think that's those are contributors to top line, but then you want to have conversations where you have your costs, but you want to see that widen, right? Like it's getting cheaper to operate, and you're able to capture more margin. But I think but margin isn't. It depends. It depends on the investor. For some investors, they want to see immediate margins. If you're a growth stage, late stage company, and you're taking a hit on margins in order to build customer loyalty or to build something, there's some investors who may be they would see that as a good thing. So I think, again, like the key is you want to have a healthy business with strong financials. You want to have good leadership in place and good governance. And then for the kind of business you are, the stage that you are, you want to have there is probably a private investor or some way for you to move forward or on from your business. And I think it's about finding that good relationship. And you never want to be in a position where you're, sort of desperate for that next step and you have to take what you can get, because it is a relationship. You're in a relationship with whoever is investing in your company. You want to make sure that's good. And so, there may be times when you receive an offer and a founder just said to me, you just got a spidey sense that's not the term sheet that what they wanted wasn't going to be a good fit. And so, that particular founder walked away. And I've been in that position as a founder myself, where I didn't have a great spidey sense around what an investor was offering me. And I ended up taking that deal and regretting it. So you really, yeah. I don't think I did a great job of answering that question.
Well, no, I mean, I think there are a couple of drivers that you pointed to, which was growth potential, obviously financial performance, and management or leadership. So those are good drivers. And I think the thing that that you mentioned about the spidey senses for founders is, how do they improve their their spidey senses? Because it may just be they may not have. Is it a will thing? Is it a skill thing? Is it some kind of a combination? Where does that come from?
This is going to sound really silly, but I make this metaphor a lot, but it's sort of like dating. You're sitting across the table from someone, and you just or if you're just not comfortable with all of the different stipulations that they've put on the money that they're offering.
Okay.
I think the time to meet with folks who may be interested in investing is not when you are raising money. I think you never, it's sort of like people say, you never stop looking for a job, right? You never stop doing informational, you never stop meeting people. It's the same thing when you have a business. So when when you're not raising is a great time. Now, you may be busy, you don't want to take up all of your time, but to build those relationships, to have people ask you questions, and hard questions that you may that force you to sort of rethink things, is a good time to do that, is when it's not urgent. And then the more conversations you have with folks in the the investment space, the more you get a feel for what folks are going to be looking for, the more you get a feel for what different types of investors, what it would be like to work with them. So that would be my advice.
What percentage of time, just again, it's not, no, again, and there's always going to be variation, but ballpark range, how much of a founder's time, because we have some founders that tend to get caught in day-to-day running of their business. But if they need to carve out time to be able to meet with investors and get a sense for what's going on in the market and what the market is looking for, what percentage of the time ideally would you recommend?
Yeah, that's a really good question. And it's always, I tell founders, I know that you didn't start this business so you can sit around talking to investors all day. But it's my job, and I love talking to founders, and I could literally take up all of their time because what they're doing is so amazing, and they're usually often really interesting people, and there's something driving you. And I'm a former founder myself, so I always want to talk about people who are doing it and who have done it, right? But that's not why you found a business. So you don't meet with mortgage bankers because you want to talk to them. You meet with them because you want to live in a house that you own.
Right.
So this is a long way of saying I empathize, but I don't have a great answer. I think if you're not actively searching for funding, I mean, I think think of it as sort of professional development, right? If you're a founder, how much time do you put into sort of improving your own role as a founder, whether you're the CEO or whether you have some other C-suite role? Maybe how much, if there's an aspect of your business that you're less familiar with, how much time would you put in outside of running the day-to-day and doing your job into finding out about that? Because honestly, the working with investors and meeting them is one aspect of your business that you
Yeah.
may not know much about. So I think I've succeeded in not answering your question again, but giving your audience a different way of thinking so they can come to their answer on their own. That's my goal.
Yeah, yeah, no, that's the Gestalt model, right? Which is to kind of share examples and experiences, and they kind of because everybody's experience will be different. So, but
Yeah, I just would feel terrible if I said 15% and then someone comes to me a year and a half like, I spent 15, it wasn't enough, or it was a waste of time. Like, oh.
so do you have an example of that you're really proud of a deal that went really well that maybe you could share?
Yeah. Yeah. There's a company that I have developed a relationship with, was introduced to me by another colleague, and it's a home care business, and it's software enabled,
Hmm.
um, called Honor, and they're based in San Francisco, and they've just disrupted and revolutionized the way that home care is delivered in the United States. And I feel I think it is a company where the because of the software disruption, because of this company, and the employees that deliver home care have a
Hmm.
better experience, best in class experience, and then the people who need care in their homes have a better experience. And so it's like the perfect example of alignment. How do you Here's a situation where um home care, how the way home care is delivered is sort of by zip code. It's by these small organizations that are sort of growth constricted because they rely on labor to match people, and they rely on labor within a certain zip code to get people out to customers' homes. And if we can leverage technology to actually allow these organizations to grow and to serve more people, and actually allow the folks doing the work to have better assignments, have more clarity, get paid better sooner, um, that makes the world a better place. We have my mother is a 4-time cancer survivor. She lives in a whole different state than me. At some point I will be arranged. I've gone home many times. At some point, being able to, with my phone, get clarity on what's going on in her home,
Hmm.
it's amazing.
Yeah.
So yeah, so we invested year and a half ago, and it's gone, I think growth has happened even faster than we expected. So that's been good a good story.
Yeah, that's very interesting that you would think that home health care is you can't get around having people actually being involved, and given the fact that we're having a lot, at least according to small business owner surveys, that labor shortages and qualified employee hiring has been a big issue lately. Disrupting it with technology seems to really kind of solve the issue.
There are all kinds of really interesting companies that are doing similar work. There's home care, there's home health care, then there's this nursing shortage for facilities and doctors' offices and hospitals and whatnot. So there's the whole industry. There's a primary care doctor shortage
Hmm.
looming. So there are a lot of really there's a lot. It's going to be an interesting space, interesting and somewhat noisy with solutions. And so, but the whole industry is in need of solutions that allow care to be delivered cheaper and more effectively by fewer people, and allows the people delivering that care to have more flexibility and better options. So there's a lot that's going to come up. That's my unasked for prediction.
Oh, no, that's actually, it's always good to be able to look in the future. So I'm glad that you brought it up. So how much does culture play, come into play when you're looking at companies to invest in? And have you had a situation where a business owner was reluctant for a number of years, for an outside investor to come in, and they got to a point where they realized they couldn't be in their business forever, and therefore they had to kind of yield. So kind of a
Yeah,
twofer. Yeah.
yeah. So we have I had a situation, you mean in my role now? No, we get access to some of the most interesting, best run companies. So sort of reluctant. It's funny, my partner is a consultant. So he deals with companies where there are sometimes leadership issues in that way. That's not been an issue in any of the companies, but let's start with the first question. So culture is important. It's one of the sort of 10 sort of questions that we have to answer before
Okay.
we can decide. And I find that as companies grow and scale, the people in charge of them have to grow. And early stage CEO job is not the same. If you're running a company that you just founded with your co-founder and you've got 10 employees, and you just started it a year ago, that is a very different animal than you've got 2,000 employees. Your revenues are, hundreds of millions of dollars a year, and you're about to go IPO. That is a completely different skill set.
Right.
And I marvel at the people who can go from plucky upstart, I got seed Series A funding on up to I'm now a public company CEO. It's like night and day. It's almost two different people, and not just the CEO, the C-suite, the CS public company CFO is not the same as an early stage company CFO. And so I think I think that we acknowledge that, and everyone is learning. They're learning how to run a company. They're learning how to manage employees while also doing the thing that they are setting out to do in a rapidly changing, fast growth environment. So yeah, how folks work together, whether we believe folks have the capacity to grow in that way. And I'll say from my own perspective, founding a company is awesome. And I mean that not in the like rah awesome. I mean just awesome in that you have all these jobs to do. You're doing every job, and you realize really quickly, oh, I'm bad at like 3 of these of these 5 jobs I'm doing. How quickly can I hire people to be good at those, who are good at those things, to do them, so that I can focus on these things that I'm good at? And or can I grow into actually being competent at some of these things? And I think for leaders, and this is, again, it's like not a direct answer to your question. That's the challenge of leadership.
Mm-hmm.
What do I need to grow into, and what do I need to outsource? So in a rapidly changing environment, that contributes to culture. So how do leaders think about the culture of their organization? Is this a toxic place? Because the last thing you want to do is invest in a company and then read about them in
Right.
the
Right.
paper, or read about some lawsuit or CFO exit, or all of that is not ideal. So, and that's also a reason why you want to build strong relationships between investors, because you want to be able to pick up the phone and say, hey, what's going on, or have them pick up the phone and say, hey, this is what's going on.
Yeah.
So that's the quick and dirty, not so quick and dirty, short answer to your first question. The second question is, yeah, I mean, you invest in companies or you deal with CEOs where there's strife and where things have not gone necessarily according to plan culturally, and everybody's got to navigate their way through that. But I mean, CEOs are people too, and people make mistakes, and they have, strengths and weaknesses and preferences and styles. And so then you put together 1,000 folks, there's bound to be some conflict.
Yeah. Now, is your process more like Shark Tank, or is it like a different kind of process?
It's deep research. It's deeply research focused. Really peeking under the hood and looking at me having many conversations with C-suites and founding teams and customers and early stage investors, and finding out and then creating a hypothesis. These are the numbers. This is the results of the conversation. These are the questions that we still have. And this is what this sort of hinges on. And then there's a lot of discussion. It's kind of like grad school. So you write a big research paper, you do lots of primary research, and then you talk to your colleagues, and they have questions that you can't answer, and everyone's super smart. So people are asking you questions, and after you've spent weeks researching something and you think, oh geez, why didn't I think of that? And then you go back and you ask follow-up questions, or you try to find the answers, and then a decision gets made by one of the decision makers. And it often depends on there are multiple funds involved, and so then a decision gets made and gets communicated, and then we start on the path, on the relationship path.
Right.
And go ahead.
No, I was just, yeah, go ahead. I'm always thinking of the timeline, because as you delineating the steps in the process, I'm thinking of how long, ballpark, how long that whole thing, could take, of course, depending on
Well,
the situation.
it sort of depends on the timeline. Companies' timelines are getting shorter and shorter. And so it depends on the timeline that they're on. We're not known, we're known for being long-term investors. We're not known for, 20-minute phone call and then here's a term sheet. That's not how we invest. But there are folks who do that. So, and results are I've told people there's a myriad ways to make money in this business. So, so our process is we're not known for being super quick. We're known for being good partners, and that's what we build our reputation on. And
Yeah.
long-term partners.
Now, in general, do you tend to approach these businesses, or do they tend to approach you? How does?
So we get emails from bankers,
Okay.
investment bankers all the time. But I mean, and that's it's like drinking water through a fire hose of the amount of stuff that you get through. We have a good reputation with the founders and the teams that the companies we've invested in. So a good number come from referrals.
Got it.
So, because founders know each other and they talk to each other, and CTOs go off and start whole other companies, and they remember you, and so a good chunk comes from that. And then we have advisors and bankers that we value their opinions, and we take a look at everything, and we decide how far to go along that process of researching a company and building conviction.
What is the in terms of the optimism pessimism scale? How do you see the environment, given the fact that the Fed is talking about interest rate increases, maybe 3 or 4 times this year? How do you see that impacting the market and just the overall industry?
So the fun part about being a very long-term investor is that over, there's going to if you're in a company over a 15-year period, what's going to happen over the next 3 quarters with the Fed is not, it's definitely of interest, but it's not going to make or break anything. And that's what I actually appreciate about the specific place that I am at right now, is that we map things out over a decade or more. So yes, it allows you to constantly be an optimist.
Right. So what are some of maybe the last question, maybe, what are some of the long-term indicators that you tend to look at? Because yeah, short-term, bubbles and fluctuations, not too much, of too much concern. But what about long-term? What are some of the factors, whether macroeconomic or political, that you tend to look at?
I don't think, yeah, that's a good question. I think, and my colleagues, we would all have different ones.
Okay.
I look at, climate
Okay.
change,
Okay.
population change, graying population is obviously a macroeconomic, or not a larger societal indicator
Right.
that plays into the decision to invest in home care, right?
Yeah.
Just larger trends, right?
Right.
Software is eating the world. We able to do some thematic research on the future of food, which is also climate related, also population related. Consumer habits and how they might evolve in regions that are developing, in countries that are moving from low to middle income. So it's less, as a global investor, it's less, it's less based on just short-term US monetary policy, inflation, and what's going to happen with the presidential election, like that.
Right.
And I live in America, so I realize that but then I talk to all my colleagues and they're like,
Right.
what's going to happen in your crazy countries? We're going to invest in great companies no matter what. And I appreciate that perspective.
Yeah, so as long as the fundamentals of the company are good, and they're fit within these other, big giant macro factors. And I'm glad that you brought those things up, like society and structure, because it reminds me of Peter Drucker's theory of the business, where sometimes the assumptions could change, but the business model is stuck, and that's what gets some of these business blue chips into trouble. So whether it's climate
I think there are a
change or
lot of, go ahead.
Yeah, I was just saying whether it's climate change or some of these other, like food displacement factors, right? And what that means for a business model. And I guess maybe that's probably where for a business owner, that's the benefit that they get from working with you, right? Because you bring that perspective, say, hey, right, for these future trends that we see in the next 10 to 15 years, what does that mean in terms of your culture, your business model, and things of that sort?
Yeah. Yeah, I would say that's true for a lot of that's the benefit of working with a lot of investors, is that you get to be a futurist.
Right.
I think for us, the best part of the job is that we get to work with companies that are disruptive. So they already know, they know this, which is why they've decided to build a vertical farm, right?
Okay.
So I just flipped it. But like I said, if you are a traditional business owner, working with an investor could be helpful because that's their job as well, to look into the future. But it is incumbent on all leadership to sort of that's what leadership is, preparing your flock, your company, your
Right.
country, no matter what you're leading, for the future.
Right. Now, you mentioned vertical farm. Maybe you can explain a little bit, because not everybody may be familiar with that term in terms of, growing by way of, like adding different, like for instance, if you're a software company, you acquire like, the hardware and all those, different things. So if you're in a car dealership or thing, you acquire the supplies, all those different things. So, um, is that are you looking for just a vertical scale? Are you looking for horizontal scaling as well? Or no, how does that play?
When I was talking about the future of food and vertical farming, I mean, there's traditional agriculture that happens outside and is, dependent on the weather and the soil
Okay.
and whatnot. And a vertical farm would be something that happens inside in a factory where greens are grown.
Okay.
There's lots of different, and then there's technology that allows for a more consistent product, whether it's spinach or arugula or basil, consistent product in a shorter growing season. So I was literally talking about
Okay. All right. All
a
right. That's cool.
vertical
Never mind.
farm.
I misunderstood. Yeah.
So when I was saying, the founder that starts a vertical farm is the
Hmm.
founder that already understands the future of agriculture.
Right. All right. Okay.
Right.
Gotcha. So that was a specific example, not a
Yeah.
general kind of
Sorry
trend.
about that.
Okay. No, that's good. That was my mistake. So that's great. Well, I wanted to bring this to a close by getting your overall summary of just the growth investor and how businesses make themselves more attractive, um, and to your point of view, and just what you see, what are some of the whatever advice or words of wisdom you have for business owners who may be listening, and maybe candidates for a conversation with you.
Yeah, I mean, I think that it's, like I said, these are relationships. And so the more people and different kinds of investors you can meet, the more you can have a sense of where you fit in that ecosystem. And I think having a good, just like I said, sort of like with dating, you have a general list of what you like and the kind of person you're going to get along with. I
Right.
think as a business owner, you would have a general sense of the kind of investor that you're looking to bring on board and to develop a good working relationship with. And it really depends on what your goals are for your business. So having that clarity and then going out in a way that's not pressured by specific and time limited needs for capital, I think is the best way to go about learning about about the industry
Yeah.
and how it
So
can be beneficial to you.
yeah. So understand who you are, what you want, why you want it, and do it in an environment that is less urgent, so you can make better decisions and be ready for conversations with a growth investor. That's great. Well, thank you very much. How can people, if people need to get in contact with you, what's the best way to follow your work or get in contact with you?
Well, I'm on LinkedIn.
Okay.
So yeah, that way.
Yeah, we'll have that information in the show notes. So in case people want to get in contact with you on LinkedIn, certainly they can do that.
Okay.
Fantastic. Well, thank you very much, and I appreciate your time, Anika, and I'll talk to you soon.
Yeah, thanks so much for having me. It was a pleasure chatting with you.